Welcome back to the Bitcoin Layer. I'm Nick Bhatia, and today we have an extremely special guest for you all, Michael Saylor. Michael, thank you so much for joining us here today at the Bitcoin Layer.
Yeah, thanks for having me, Nick. I'm looking forward to this.
I'm really excited to have you. You offer so much perspective for the investment audience in terms of why Bitcoin, and I think that it's one of the things that the world has identified you as one of the best metaphor messengers on Bitcoin. So I was hoping that going into Bitcoin's 14th birthday here in a couple months, you could give us a refreshed look and take on what you feel the best metaphor or two are for Bitcoin. Not necessarily Bitcoin as of 5 years ago, but how do you see it explained best today as Bitcoin has evolved through a few cycles?
You know, I tweeted this morning that that Bitcoin is property, and I think a lot of people are getting the idea that Bitcoin is really technology to manifest property rights to 8 billion people. Um, but if we look at it, look at Bitcoin as perfected property or engineered property, uh, that thing which you would need to provide to an individual so that they would have property rights, then I think that's an ideal metaphor. I think a lot of people have talked about it as a currency, and we've discussed other metaphors for it. But probably the most constructive thing to do is to compare Bitcoin to other forms of property and other assets to deliver property rights to individuals.
So, can you talk to us about your view about Bitcoin in terms of the potential demonetization of other asset classes? So, I've heard you describe how you believe some of the capital that's allocated to real estate and equities, for example, is allocated to those two asset classes because there is no other alternative for that storage, and Bitcoin represents that. So explain that to the listener, please.
Sure. Well, in the absence of sound money, if fiat currency or the currency of any given society is not holding its purchasing power, then rational actors, be they corporations or individual investors or families, will tend to take their weak currency or their weakening currency, and they will want to invest it in some stronger asset that'll be a store of value. And so, if we look at the United States, the S&P index has emerged as a store of value. There was a time when you could actually take your cash, put it in a bank account, and generate 5% interest. And if you thought you were getting 5% interest and the natural inflation rate was less, then you would do that. Most people concluded that that wasn't good enough, and they actually became stock market investors or real estate investors. But there was a debate about what the inflation rate is. And so if you roll the clock back 30 years, some people, less sophisticated, would have put their money in a savings account. Other mid-sophisticated would have put their money in a mutual fund. And I'd say the highly sophisticated put their money in commercial real estate or real estate ventures. And the reason they put them in real estate ventures is because real estate offered greater property rights and greater leverage. You could lever real estate 5-to-1, 10-to-1, and more readily finance it without a mark-to-market. So I would say the really sophisticated long-term investors looked to commercial real estate or some real estate play. The convention was I put it with a mutual fund or I invested in an S&P index. And I would say the working class solution is I put it in the bank in a savings account or credit union, and I get 3, 4, 5% interest. That regime kind of disappeared maybe 20 years ago, or certainly 10 years ago, when the yield on credit when the yield on savings accounts went to zero. So when the yield on savings account is zero, then there's no one thinking they're saving money at 0% interest. the perception was still the inflation rate was 2 or 3%, even though it was much higher than that. So now long-term store of value moved to a focus upon stock indexes and real estate and ETFs. The king of all ETFs was the spider, the S&P index, but we had an explosion in ETFs in the past decade, and there were all sorts of other types of exchange traded funds that represent ownership of a share of commodities or companies or something. And so all of those things are, the ETFs are securities. And if you're not going to save with securities, you're going to buy individual stocks, which is a bit complicated. And some people did that. And the last thing is maybe, again, you go back and you invest in real estate. Now, commercial real estate investment is really very capital intensive. So you have to be in the 0.1% or the 1% of the investors to have the capital to do that. Most of the rest of the investors, if they wanted to pursue a real estate strategy, they would get a second investment property. Right, the classic would be I bought an apartment to Airbnb, or I bought a rental apartment or rental property, or I bought some kind of share in a REIT. And that takes us up to the stage where people started to notice Bitcoin. And I think that it's pretty clear, by the end of 2021, after the pandemic crisis, we had monetized a lot of different assets. We had a spike in housing prices where we're monetizing. We're basically putting a premium on housing in excess of its utility value. We had a spike in commercial real estate. We had a spike in meme stocks in their value. We saw extraordinary spikes in collectibles, in watches, in sports cars, in artwork. So as the central bankers were flooding the economy with excess currency, the currency is trying to find a tangible asset that will hold its value as the currency debases. And everybody chooses a different one depending upon what they know and what they're comfortable with. Bitcoin, right, is one of those assets which is now being monetized, and it is rising through this chaos to be the apex property asset, or the apex monetizing asset. So I'm of the opinion that we're going to see a consistent demonetization of other key assets, and one asset that you'll see demonetized, that we're seeing demonetized right now, is bonds. I mean, I guess the big three category, right, are maybe the big four: currency, bonds, real estate, and equity, right? Those are the four big asset classes that have been monetized by excessive money printing. We see, and gold is a small one, right? Gold is 10 trillion. All the other four are 10x more than that. So the big four are the currencies, the bonds, the equities, and the real estate. They're starting to be demonetized now. And I'm not going to dwell on bonds. That's probably a discussion for another time, except to state that, obviously they're crashing. They've lost 20, 30, 40% of their asset value as interest rates come up. What I'm going to do is I'm going to focus upon real estate, because I really think the interesting discussion here is how Bitcoin demonetizes real estate. And what will it demonetize? Well, what does it mean to demonetize? Well, there's a value of real estate to a utility value to someone that's using it, right? The true utility rental value. And that doesn't matter whether it's a consumer or a business. There's a utility value to the real estate. And then to the extent that the price of the real estate is beyond that, that is the monetary premium. And there's a whole lot of commercial real estate that has a monetary premium. The way that you would know that it has a monetary premium is you think about all the people that have excess cash and they don't want to store it in cash. They don't have a safe bank account or a savings account to put it in. And their view is, I've got to buy an investment property, right? The world is full of people that have said, I bought a second investment property. Or I bought a piece of commercial real estate, or I'm an investor in commercial real estate because that is the place that I wish to store my money, right? Why do you even want to store your money? Why do you even want to be an investor, right? The only reason anybody wants to invest in anything is because they believe that the risk-free rate of return on their money is too low to keep up with inflation. If I told you that the money was going to grow in value 10% a year and you knew the inflation rate to be zero, you wouldn't invest in anything, right? You would just put your money in a safe place and wait for it to create in value 10% a year. So in extreme hard money environment, the average person, right, the non-expert isn't an investor. The only people that really should be investors in theory are professional investors, right? Professional venture capitalists and professional investors who spend all of their time analyzing opportunities to ascertain the true long-term value of the cash flows. But the world is full of people that are actually making investments in order to preserve their wealth, and they're doing it because of the weak money. And so one of the places they make their investments is in real estate, investment properties. It could be I got a second home and I rent it out. It could be I bought an apartment and I rent it out. It could be I Airbnb something. It could be I went in partners with 3 of my friends and we bought, a small garage, or we bought some warehouse or something. That's going on everywhere in the world. So how does Bitcoin demonetize that? Well, I think that you just want to start from first principles and you want to ask, what is property? And you can either get to pure property by taking away all the defects of real property, or you can start from nothing. But let's start with real estate, real property, and strip every defect away from it. So let's say you had a piece of commercial real estate. Maybe it's a $2 million building called a warehouse, or $2 million. That's 100 Bitcoin. 100 Bitcoin building as of right now. And I happen to pull out a genie in a bottle, and the genie comes out and says, well, Michael, I'll give you infinite wishes. And so I start casting magic spells to fix the defects in my warehouse. So what's the first defect? Well, the warehouse has got a finite life. It's only going to last 100 years. And after 100 years, the warehouse is going to fall down or rust. It's got a problem there. It won't last 1,000 years. It won't last 100,000 years. So I say to the genie, why don't you make the building last forever, like literally immortal? Okay, how do you do that? Well, just make it out of something which is literally indestructible. How about pure energy, pure solar energy? Like stars last 1 billion years, so make it out of star stuff. Okay, fine. The building is immortal. Now the second problem is buildings are prone to damage. If there's a hurricane, or if there's an earthquake, or if someone drives a truck into it, or if someone sets a bomb off in it, or if it gets rained on and the water runs into cracks in the buildings and the water expands and the building facade decays and it crumbles. So I say to the genie, make it indestructible. No problem. When I made it immortal, I also made it indestructible, right? So it doesn't matter how often it gets rained on, and if it gets struck by lightning or rained on or crashed into it or exploded, it's not going anywhere. Okay, indestructible, immortal building. Okay, remember the building was worth $2 million, 100 Bitcoin. Well, is the building that's indestructible and immortal worth more or less now? Right? A little bit more, right? Maybe a lot more. You could say, well, I got to discount it for the cash flows that you're going to generate in years 100 to 10,000, right? But generally, a building that will last forever, that you can't destroy, is more valuable. Now the issue is the building has maintenance fees. There are all sorts of fees normally on an ordinary building, and you're paying insurance. That's a maintenance fee. Well, the insurance goes away if the building is indestructible, right? And then I have to always, if I have a building with steel or something in it, I have to paint it to keep it from rusting. Well, that goes away. No repainting, no changing out the roof. So no caulking, no fixing cracks. So the maintenance fees go away. And if the maintenance cost of the building goes away, then it's worth even more. Oftentimes maintenance fees could be 1, 2, 3% of the commercial value of the building. So if you pay 3% of the value of the building for the next 100 years, right, that's 300%. If I took the 300% and I took it to zero, building is worth more. Okay. So that's good. So the genie basically makes the maintenance cost, makes it a low maintenance or zero maintenance building. Now, what else drives down the value of the building? Property taxes. The building is sitting in the middle of a city, and there's a city tax. There might be a state property tax. There's some kind of property tax. Those taxes can range from 10, 20 basis points a year to 250 basis points a year. In Florida, the property tax on a building that's held as a residence is 200 basis points a year. The $10 million building costs you $200,000 a year to hold it. That's another form of maintenance. So I say to the genie, well, make the property tax go away. Well, how do we do that? Well, we move it out of space. It's not in a city. It's not in a country. It's in cyberspace. So in cyberspace, there's no property tax. If I could move the building, into orbit around Jupiter, there'd be no property tax, right? Move the building. So now I've got an indestructible, immortal, maintenance-free building with no property tax. It's getting a bit more valuable. Now, what's your next wish? Well, the building is sitting in California, and nobody wants to rent the building in California, but all the customers are in New York City. So I blink, and the building is teleported to New York City. Great. Well, now they want the building in Tokyo during the Tokyo Olympics. So I blink, and the building is there. So I say to the genie, well, make the building teleportable. If I can instantly teleport the building anywhere, that would be better building. Okay. I've just upgraded the property a bit more. Now, what impairs the value of the building? Well, a limitation on who you can rent it to, right? So when I can teleport the building, then I can move it to any city or any place where there are people, and I can rent it to them. But the other problem is you can only rent a building maybe by the month, maybe by the year, maybe by the decade. Well, what if I've got someone that's willing to pay me $100,000 a day, but they only want to rent it for 3 days during the Monaco Grand Prix? That's an example. During the inauguration in DC, when there's infinite demand and people will pay 10x as much. I need an office space in DC for 3 weeks. Can you teleport the building there? Well, that would be an easier to monetize piece of real estate. So I say to the genie, let me rent it to anyone for any period. Or another way to say it is I want to be able to rent it at any frequency. Anywhere at any frequency. That upgrades the value of the real estate. Now, someone comes along and looks at my warehouse and they go, yeah, well, this is great. I would pay you quadruple normal rent, but I only want a quarter of it. Okay, I'd like to be able to subdivide it. What if I could subdivide the building into 4 pieces and ship it to 4 different cities and sell it to the highest bidder? The ability to freely subdivide and recombine the property at any frequency makes the property more valuable. Here's the trick. Convert the building into a hotel, divide it into 100 rooms, and then make it into 30 suites, and then rent the suites for 30 hours each, and then recombine it into one big banquet hall, and then convert it back into a warehouse. And what you're doing is you're morphing the building day by day, place by place to maximize the rents. Now you look at it like that, you say, well, that building I started with doesn't feel that good. It was static, it couldn't move, it couldn't reconfigure. This one sounds much better, a flexible building. So then my issue is, well, it's only a warehouse or it's only a whatever. I want to use it for anything. So if the genie basically cast a spell and allowed me to convert the building into a school or into a sports stadium or into a hotel, right? Or how about this one? Into a container ship. People don't want hotels. They want container ships that carry natural gas right now. Well, it'd be a lot more valuable if my real estate could become a different form of property. So if you can use it for anything, that's a big upgrade. You know, the other thing you want, right, with any property is you want to upgrade it over time. Like I've got a piece of property, I've got 10 acres and it's a parking lot. Well, it's worth X, but what if I could develop a 1,000-story parking garage on top of the same acreage, and I could develop a 1,000-story building on it? Well, my development rights are worth a lot. In fact, in New York City, oftentimes you see these people that operated parking lots, and they sold their air rights, the rights to build above the parking lot, to the hotel or the commercial office building to their left or their right. And the air rights might be worth $10 million or $20 million. The parking lot's never going to generate $20 million, but the right to develop is. So my property would be a lot more valuable if I had the right to develop it. Now, who controls that right? Well, it's your neighborhood, your precinct, your city, your state controls your right. But if I had property in cyberspace, I would have no limitations on my ability to develop it. Like you would say to me, well, wait a minute, Michael, what's the point of selling the rights to build a 1,000-story building when the tallest building that anybody is allowed to build in New York City is 100 stories? See, it's impaired by code, right? But then you might say to me as an engineer, what's the right of selling a 1,000-story building when the tallest building that any architect has built anywhere in the world is 150 stories? I would say, well, this century. What about next century? What about 200 years from now when we have adamantium steel, right, or some new construction technique? Do you really believe that the tallest building in the year 2022 will remain the tallest building in all of humanity for the next 1,000 years? Right? I mean, roll the clock back 100 years. How far have we come? Roll the clock back 200 years, and the tallest building's 6 stories just about everywhere. So the ability to continue to upgrade the property, or the ability to sell the lien on it, right? The ability to sell the right. Like, for example, I'm the humble parking lot operator, and I'm going to sell you the right as Mr. Developer to the 100 stories above my parking lot, and you're going to give me money today, even though it will take you 10 years to find a buyer for those rights. Maybe it will take you 30 years. Maybe you will die and you will pass the rights to the development of the land to your heir. And in 30 years, someone in your family will actually develop that property or develop that right, and they'll make a lot of money, right? Do those property rights have value? Well, ask the people that own the property rights to Michael Jackson music, right? Or the Beatles catalog, right? Or fill in the blank, right? Intellectual property rights have value over time. So will property rights. Now, the funny thing is, we talk about property rights. I just gave you property rights. How many people have managed to sell their property rights? Not often, because we never thought of them that way. So I'm making some progress in getting rid of the defects in real estate. And I think the next defect is, right now, real estate in the physical world is upgraded with tractors and machines and steel and electricity, right? And material. But what if I could upgrade the property using computer chips, right? If I look at the efficiency of a computer chip, they've improved by a factor of 1 million over the past 10 to 20 years. But if I look at the efficiency of construction cranes in New York City, they have not improved by a factor of 1 million in the past 20 years. So clearly, moving into the computational domain for development out of the physical domain is a way to upgrade the value of the property. And that's another really nice thing about digital property versus physical property. Now, all of those are upgrades, but then the genie says to me, I got an idea for you. I'm going to make your property invisible to those who would do you harm. What is the definition of privacy? One definition of privacy is my property is invisible to those who would do me harm and available to my friends and family. Right? So you think about walking down the street, seeing a wall, and you see the sign private property. It's like, well, it's not private to the family of the owner. It's not private to the friends of the owner. It's private to the criminals with guns outside the fence that might want to jump the fence and do you harm. Okay, the ultimate private property, though, is property that's so private that no one that can do you harm, whether they're a criminal or they're a competitor, right? They could be a competitor, they could be a criminal, they could be a corporation that wants your property. It could be a government or a state actor. When you don't have property, if you did have a 100-story indestructible shining building in the middle of a city, don't you think that people in the city would start staring at the building and resenting the person that owns that? So making it invisible or just making it go away. I don't want to own a perfect piece of property in the middle of a city where there are malefactors that would do me harm. I want the property to be in the middle of the Milky Way nebula somewhere a billion years from now, where no one can see it, no one can get to it, and no one will resent the fact that I have it. That is what privacy is. So the genie gives me privacy to my property, and they upgrade the value of the property. What would you rather have? The skyscraper in the middle of the capital of a hostile nation state, or the equivalent skyscraper somewhere in the ether that's just as useful to you? Right? You know, the mythical Brigadoon, right? The magic city, the emerald city, over the horizon, over the rainbow. It's good for you. You know, we have other phrases for those. Sometimes we call it heaven. Sometimes we call it paradise, right? You know, and so that's what private property really means. Now, we haven't gotten rid of all the deficiencies in property. For example, if you want to buy a piece of real estate or sell a piece of real estate, if it's residential, it costs you 6% coming and going. A $2 million residential real estate is $120,000 of fees to buy it, $120,000 of fees to sell it. Heck, you turn it over once and you paid 12% of the value of the thing. With commercial real estate, the fees are a bit lower, but they're still percentage points, 1-2% or something like that. So I think I'd ask the genie to allow me to buy and sell the property at no fee, or 5 basis points. Make it possible to transfer it at 0. You can transfer Bitcoin, on chain or on the Lightning chain at numbers that are either, anywhere from 10 basis points to 1 basis point, and on Lightning less than 1 basis point. So that would be nice, right? I mean, no one's got a cartel on fees. Make the genie get rid of the oppressive transaction fees. That takes me to my next point. I want my property not to be private. I want it to be unconfiscatable. Okay, if you own a farm outside of a city and the city wants an airport, they can seize your farm by eminent domain. They can buy it at the rate they want to pay, and if you don't want to sell it for that amount, they can just pass a law taking it, and they can pay you whatever they want. And in a war, they're going to take it for nothing, right? They'll just declare it's a war, and they'll say you have to give it to the public for the public good. And in peacetime, they'll take it for whatever they want, and maybe they'll take it for their road, and maybe they'll take it for their airport, maybe they'll take it for their public park, or maybe they'll just take it because they don't like you, right? Maybe you're the wrong religion or the wrong color, or the wrong shape, or the wrong look, or you've said the wrong thing. So everything that I've said before to the genie, it still doesn't solve this problem, right? How do you make it unconfiscatable? Well, so if you actually put title to the property in your head as opposed to anywhere else, then it does become unconfiscatable, right? They may not, assuming that they get past, your other defenses, like the fact that you can teleport it anywhere and it's private, then you still have the option to keep it. It can't be seized. I'm not done with that genie, right? As I pointed out before, the idea of teleporting it is not just teleporting it in space, but also moving it through jurisdictions. Different jurisdictions put different restrictions on it. So I want the property not to be able to be impaired by developmental restrictions, right? And anything physical, by definition, can be impaired, but anything in the cyberspace, you have a decent opportunity to keep it from being impaired simply by moving it. I talked about renting it at any frequency, but the other right you have with property is to mortgage it, to actually borrow money against it. When I have a building in a state in Atlanta, I can mortgage it to banks that do business in Atlanta that are licensed by the nation state, by the state of Georgia, by the city of Atlanta, that have a license to do business in the United States. But if someone offers me a better mortgage, if they offer me a mortgage at half the cost, but that is coming from a different nation state, I can't take that mortgage because I can't move the building. So when the property becomes flexible, it becomes possible to mortgage it to anywhere, to anyone on earth or in the heavens, right? Any bank could become the counterparty in the mortgage. But, mortgages come in flavors, like generally, multi-year, 1 decade, 30 years. What if I wanted to mortgage it at any frequency? What if I just wanted to borrow some money for the next 30 seconds? So the ability to mortgage to anyone at any frequency is an upgrade. Now, why would I want to do that? Well, here's a real world or a practical example. I want to actually borrow money against my property, and every month someone offers me a higher bid or a lower cost, a better offer. So I just move it, 1 month I'd mortgage it to a bank in Singapore, another month I'd mortgage it to a bank in London, a third month I'd mortgage it to a bank in Atlanta, the fourth month I'd mortgage it to a different type of company, right? It's a very flexible piece of property, and I can move it at any frequency, and I'm in essence driving down the cost of my capital in the same way that when I rent it at any frequency, I'm driving up the yield on my asset. And that makes it a better business. Last ideas? Well, I say to the genie, can I just store an entire $1 billion building, in the palm of my hand? What if I could store a 10,000 floor building and I could wear it around my finger, right? Infinite economic density. Right? The black hole, right? The white dwarf of money. In this particular case, if I can get to infinite economic density, that would be very convenient. Because if I don't have infinite economic density, when it takes you an entire city block to have, a warehouse, well, then you run out of the ability to manage that warehouse. And so this infinite density gives me a lot of flexibility to manage the property however I want. And then I think my last twist is I say to the genie, I like the way you fixed my property and made it maintenance free and indestructible and immortal, and allow me to program on a computer and move at the speed of light and make it non-confiscatable, etc. But now I'd like you to guarantee me that you don't sell more than 21 million blocks of this, or do this for more than 21 million in the universe forever. So if you actually could get the universe to agree that there'll never be more than 21 million blocks of perfect property, that's the icing on the cake, right? When I did everything else, I created digital property, but when I capped it at 21 million blocks, I made it digital scarcity, or the ultimate scarce property. It's what happens to property values when the city passes a law saying that no one can develop any more real estate. You cannot build any more buildings, or you can't build a building more than 10 floors forever in city limits. When you put a restriction on the property development, it drives up the value of all the property within the city dramatically. So here we're talking about putting a hard cap limit on digital property in the universe for all time. That's even much better than 21 million for the next 100 years, or until, the administration changes or someone passes a law, or 21 million, but only until the United States of America ceases to be a nation state. That's not quite as good as 21 million forever. So what I just did there was I, made about 18 wishes to my genie. And each wish removed a defect in the property. And it doesn't take a rocket scientist to figure out that now I've got $2 million to invest. Do I want to own a $2 million warehouse in any city in the world? Or do I want to own 100 Bitcoin? Seems pretty obvious, right? When you buy the $2 million warehouse, you are marrying the neighborhood zoning board, you're marrying the city, you're marrying the county, you're marrying the state, right? You're married for life to the country, right? You're conjoined to, and if you think all of those will go on forever or for your useful horizon perfectly, you've still got the issue of acts of God, right? Now you're exposed to earthquakes, tsunamis, floods, fires, lightning strikes, hailstorms, global warming, etc. And it's pretty clear, right, that commercial real estate was a good idea for property preservation in the 20th century. But in the 21st century, it's an antiquated idea, right? It becomes antiquated as the governments and as the society around the property decays, the property itself decays. For example, you wouldn't really want to own the most beautiful building there is in a country where the regime collapses, right? You could have a luxury hotel, but if the currency collapses and the government collapses, your luxury hotel isn't going to hold its value. So as various nation states collapse, the properties collapse. A great case in point would be to go look at, say, luxury properties in Cuba, and look at what happened to luxury hotels and luxury houses in Cuba with the rise of Castro. Right, it kind of peaked in 1960, and then for the next 60 years, all those properties decayed gradually, and another 40 or 50 years, whatever beauty or value that was there is gone because they haven't maintained them, and they can't maintain them. At least not without fixing the other economic ills. And Bitcoin is the opposite of that. Whereas commercial real estate peaked, as for when it peaked at different points in different jurisdictions over the last 100 years. Bitcoin is now just beginning to come into its prime. And every time a new Lightning wallet is shipped, Bitcoin is upgraded. And every time a new layer 3 app is created, Bitcoin is upgraded. And every time a new miner comes online, Bitcoin is upgraded. And every time a new regulatory guideline is laid out, Bitcoin is upgraded. So Bitcoin is just continuing to improve its property. Real estate is continuing to decay its property. If we come back to your question, how does this get demonetized? Well, you can see that the only reason that a casual investor wouldn't start to shift their allocation of savings from commercial real estate to Bitcoin is they don't understand Bitcoin, right? Most of them, if you walked up to the typical real estate investor and say, quick, give me the 18 crippling defects in your real estate, They couldn't name the 18 things I just laid out to you. And you know what? I couldn't either before I knew Bitcoin. You don't understand the defects in your property until you see perfect synthetic property or digital property. Just like you don't understand the defects in your currency until you see perfect currency. If you don't understand Bitcoin, you don't know what's wrong with gold, right? And you don't understand what's wrong with fiat currency really until you understand what's right about Bitcoin. And I think the same is true with property holders. They don't understand what's wrong with their investment until they understand what perfection looks like. And most of them, when they hear Bitcoin, they just are afraid. Their reaction is just, oh, it's scary. I'm afraid. I don't know much about it. It's too volatile. And their brain shuts off. And that's like as far as it goes. So as we educate the population on Bitcoin, I think people start to create tables of the 10 defects in real estate versus Bitcoin. And then you go, wow, the only thing not to like about Bitcoin is it's new and volatile, right? And once you understand it's new and volatile, well, what is the negative? Oftentimes people have managed to not mark their real estate to market. If you can avoid a mark-to-market loan on real estate, then you're in good shape. Any big property development family that went bankrupt, they normally went bankrupt because their real estate assets got marked down and their loans got called by the bank. So it's that volatility, which is the number one risk. And as Bitcoin's volatility decreases over time, the loan to value ratio that you could incur if you're acquiring Bitcoin will start to advance. Right now, it's a low loan to value, but it will grow as the volatility deteriorates. And as I've illustrated, even in commercial real estate, there still is some volatility, and there are still some mark-to-market loan defaults sometimes. But having said all that, that doesn't, whether or not the asset is volatile, doesn't change all the other strategies with regard to real estate investment. If your only strategy is I wanted to borrow money to buy real estate, well, then you're going to lean toward non-volatile traditional assets that your bank won't remark every day. But if you're not using debt to make the investment, if in fact you were holding $2 million in cash right now, and your choice is, do I actually put it into Bitcoin or do I put it into something else, right? Then it's a slightly different calculation. So I think that education will cause people to gradually demonetize their real estate and move it into Bitcoin. I think if we switch subjects to the second question you had, which is how does it impact equity? Well, the most vulnerable equity is the equity indexes, like the S&P index, or like some broad index of the Russell 2000 or the S&P 500 or the NASDAQ index. Those are things that people buy just to have a store of value without expressing an opinion on a given company. Like I don't want to pick which of the 500 S&P 500 companies is undervalued. I just want to park my money somewhere. So I think Bitcoin there is emerging as the monetary index or a monetary index that you can acquire, and you just don't have to express an opinion about a commercial entity. You don't have to be worried about the quality of the management team or the cash flows or regulatory concerns. And so it will tend to demonetize those indexes. And as those indexes get demonetized, if $1 billion gets pulled out of the S&P index and put into Bitcoin, then that's $1 billion of demand for stocks of the underlying 500 companies in the S&P that goes away. So as the money gets pulled out of the indexes and the ETFs, then that will demonetize the equities of the underlying constituents. And as that happens, if one of the constituents is undervalued on a standalone basis, then a professional investor will come in and they will buy that stock in order to arbitrage the difference. And so I think that that's the dynamic there. I'll pause.
And so do a little bit of fun math with me now, and let's only use the T word. You mentioned 10 trillion for gold and other asset classes 10x or more, that 10 trillion number. Bitcoin sits at less than half a trillion today. So there's just this delta of potentially hundreds of trillions between Bitcoin and the rest of the asset classes that have some monetary premium. Obviously, like you mentioned, those assets have utility value. Then there's a monetary premium beyond that utility value. So that monetary premium, it has an as a number. What do you think is the potential market cap for Bitcoin then over several decades, just using today's dollars? And let's ignore inflation as we just look at today's numbers and
Right.
hundreds of trillions of dollars relative to Bitcoin.
Well, I mean, it strikes me that if you look at gold, at least half of the value of gold is the monetary premium. So when gold trades at $1,600 an ounce, maybe, the cost to pull it out of the ground is $800 an ounce. And so, and there's more demand for it than there should be. So if you cut the demand in half, then the marginal cost for the cheapest amount of gold would probably go to $600 or $500 an ounce. So reasonable to think that 2/3 of the value of gold is monetary premium. And if people just limited their gold to their gold demand to what they want to wear, then you would see a gold price which is half to 1/3 of what it is right now, and the remaining monetary premium would flow into digital gold, which is Bitcoin in this case. So there's $5, $6, $7 trillion of gold's monetary premium to be grabbed by Bitcoin. But I think if you if you look at the world, I know lots of people, lots of rich investors that will hold a 10, 20, 30, $50 million real estate portfolio that would never think about holding 50 million in gold. Right? So I think that there's probably 10x the amount of monetary premium in real estate that there is in gold. And if you look at the monetary premium sitting between, real estate and equity, one would think that, you're starting to approach $100 trillion number there. And
So
so all of that is the truly great, the great the great waste of capital, or the great capital sinks in the world, are all of the money trapped in bonds, trapped in equity indexes, and trapped in overvalued real estate. To a lesser extent, the currencies, but I really think the bonds, the real estate, and the equity, and probably the bonds and the bonds are the biggest, the real estate's the second biggest, the equity is the third biggest, but all of them are an order of magnitude more than the capital that's been trapped in the gold asset. So 100 to 200 trillion dollars, right, is kind of trapped there, depending on how you look at it. And you can work backwards to try to figure out what that means to Bitcoin.
yes, 100 trillion is a 5 million price of Bitcoin using about 20 million coins. And the 5 trillion in gold monetary premium comes out to about 250,000 per Bitcoin using about 20 million coins. So that's really the range that we're talking about, is anywhere from 250,000 per Bitcoin to 5 million per Bitcoin in terms of just
in today's
what
dollars.
In today's dollars, and just looking at the landscape of money and investments and assets that are out there in the world. That doesn't mean that you or I are predicting it goes there tomorrow or even within a time horizon, but it's just a representative look at what you feel is the potential monetary premium elsewhere that could find its way into Bitcoin. Now, Michael, the last thing I want to ask you about today, and thank you for being so generous with your time, is about how we connected, which is through Saylor Academy and your efforts there. So Layered Money, my book, is now part of the Saylor Academy curriculum in the course Econ 120 Monetary History. It's a big honor for me to be a part of that academy. Tell people about Saylor Academy, what some of the courses are in there, why you started to bring in Bitcoin content, and anything else there you want to share.
Sure. Well, the idea behind Saylor Academy is to create college level courses or courses for continuing education for everyone, but generally for adults, right? We're not really creating elementary school or junior high or secondary school content as much as we're creating either college preparatory content or, continuing professional development type courses. We created those courses, we uploaded them to the web, we make them available to everybody in the world for free. So it's just the mission is make education free for everybody forever. You can get a computer science education or chemistry or physics, or you can learn economics. We have courses in English as a second language. We have a lot of Bitcoin related courses, Bitcoin for everybody. We have Bitcoin for developers courses. We have Austrian economics courses. We have your monetary history course. I think every week we have about 5,000 or 6,000 new students join. So it's like we're spinning up a college in cyberspace every week. And everything's totally free. There's no cost to learn. There's no cost to get certified. You can do it at your own pace, and you can do it anywhere. And the vision is 100 years from now, or hundreds of years from now, there are hundreds of millions of people. People are always going to want to be learning. Hundreds of millions of students learning whatever they want to learn, anywhere on Earth or anywhere in the heavens they are. Right, so it's a very simple idea, and it's based upon the concept that physical education is too expensive. Digital education can perfect physical education by removing all the friction and all the cost. The discussion we just had on digital property was, what are the 18 frictions that I want to remove from physical property to create digital property, and how much better would digital property be than physical property if it was immortal and could move at the speed of light and indestructible? And the Saylor Academy is all about digital education. How do we give billions of people, hundreds of millions of people, free education? And if you think about a scalable model like that, then what follows next is pretty obvious. You're just going to find domain experts like yourself, and then you're going to license the rights to books, the rights to textbooks, the rights to study materials, and then you want to upload the lectures, upload the reading guides, upload the tests, the certifications, and related learning materials, and focus upon giving it to people in a scalable platform, so that, if tomorrow, after watching this podcast, 800 people show up and they all want to learn, they can all start for free and without any gating or gatekeepers, right? It's education without gatekeepers. And so that's the mission of Saylor Academy. It's all available at saylor.org, saylor.org. We do offer a lot of cross accreditation with a lot of universities, and so a lot of times if you take our courses, you can actually submit them to other degree granting institutions in order to augment your education there and get the degree from them. We are currently pursuing university status so that we can grant our own full degrees as a university. That requires a lot of regulatory submissions and the like, and compliance investments. And so we're working on that, as we speak, and we look forward to a time when we'll grant our own degrees. But until then, we can still teach you how to code in Java or data science or monetary history or how to Bitcoin.
Wonderful. Well, Michael, thank you so much for joining us today at the Bitcoin Layer. We really appreciate your time. You can find Michael's academy at saylor.org. And where else can the listeners find you, Michael?
Yeah, I would encourage anybody to follow me on Twitter. My handle is Saylor, Saylor. If you're interested in Bitcoin, just remember the phrase Bitcoin is hope, and go to hope.com, HOPE. And we have tons of education materials, courses. We have pointers to leaders, websites, books, videos, and other instruction on Bitcoin at hope.com. My personal website is michael.com. So those are all places to go if you want more information.
Thank you so much. And thanks to everyone for joining us today at the Bitcoin Layer.
Yeah, thanks, Nick.